Good afternoon, everybody, and welcome to this edition of Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we once again delve into the depths of your portfolio and hopefully pull out a couple of winners, or maybe look at some you're thinking of buying as well. Hey, why not look at some maybe you're thinking of selling? Either way, put in a code and I'll try and give you my best technical and fundamental analysis. I'm going to do one that's come in from Volkmeyer, that's his handle or her handle, I don't know, on Twitter. They've asked for CCP. And you know where I like to start. I'd like to start at my trend ribbons. If you don't know what my trend ribbons are, they're not, look, what's proprietary about them is the traffic light system. So there is a bit of logic behind when they change from your green to your orange to your pink, of course. But otherwise, I've never made a secret out of these, okay? So you've got your 21 and 34 EMAs. They're my short-term trend ribbons. They're the light green zone or the light pink zone. And then we've got the 144 and 233 EMAs. That's our long-term trend ribbon. And on the way up, we use them as dynamic support. So dynamic simply means moving. Support means they tend to bounce. Okay, so act as a trampoline. And hey, I didn't pick CCP, Volkmeyer picked CCP, but what a perfect example of how well these long-term trend ribbons at least support price. In the short term, you see it in a smaller way, but it still happens. Unfortunately, once trends begin to change, we get beneath that long-term trend ribbon. Often we have this one last gasp attempt to reclaim it. And how many times, everyone, have you seen the break, the rally, the failure, and then back down again? And we have said many times in Ask the Experts, it's this level here. This is the key one, right? This is that trough after the break, that key trough, that if we get beneath that, it tends to be lights out for the trend. So often, we're watching the stock market and we're listening to the news and we listen to all the experts and talking heads out there, and they make us so very confused about what's going on. And hopefully, if I can give you anything in these sessions, it's this wonderful thing called technical analysis. And look, the way I do it is very much about trend following. It's very much about understanding how demand and supply manifest themselves in the market. And demand and supply have fingerprints. They have fingerprints, and their fingerprints are all over this chart. A couple of key things here for CreditCorp. I know we're navel gazing here, aren't we? We're looking into the past, but it's to give you knowledge to use into the future. We talk often in these sessions about the species ending event, that big black candle, that supply event that tells you something's not right with your uptrend. And for me, this is it here, especially. You might say, well, that's a pretty nasty candle, Carl. I get it. It's not a good one at all. But it's not as all that bad within the context of the broader trend. Yeah, okay, and I get what you're saying also. But when you blend that candle and that candle together, because this black candle is now getting this upper shadow as well, I think it's looking increasingly nasty. And as a pair blended, that's a pretty big whack of supply compared to anything else you can see on screen. So, this is your first signal that something's not right. And I would look at that. I'd go straight up, no questions asked, bang, minus 1/3. And I wouldn't get out of all the trade because we've still got an uptrend. We'll see how we go. Where might you get a bit more nervous? Well, certainly when we cracked beneath a long-term trend, that's a good enough signal, really, getting beneath this sort of this swing low here. That's what I'm talking about there. You would potentially sell another third maybe in there, and the last third certainly, or by here, but probably even here. Look at this supply event. This is another little cluster here, another little supply, there we go, cluster. Okay, and the problem with this cluster is obviously we're failing around that long-term trend zone, but it's also showing that we've got that building supply from this massive supply event, and that would certainly be your minus 1/3. Now, using my methodology, you didn't get out at the top, of course. You got out, look, an average price of, $33, but I reckon an average price of $33 is a bit better than lamenting holding this top quality. So all the talking heads told you it was a top quality stock, didn't they? It's got a dividend yield and earnings and all that sort of stuff. But for me, none of that matters. All that matters is what people are actually doing, not what people are saying about companies that you're interested in, but what they're actually doing. And the what they're doing part is what we're seeing on screen, all the way down here to $19. Okay, that's the past. Take some notes on how to use this strategy to apply in for the next bull market. Hey, will there be a next bull market? Of course, that's the good news. Yes, there is going to be another bull market, and you'll have what you've learnt now to use then. But hey, how do we tell when it's time to buy again in the bear market? Are we in a bear market? Well, we're certainly in a bear market for CreditCorp. Well, everything we talked about, everything we talked about up here, invert that, turn that exactly upside down. That's the stuff you need to see, and it's logic. It just makes sense that if all of the supply signs, this building supply was coming in to equate the demand that was in the system, because prior to that we were in the demand. It wasn't a strong one, to be fair. It wasn't a strong demand side market, but it was there. You can see, why is it not a strong one? Well, we talk about this idea of good price action, what good price action is, and this is the good price action here. All right, so this is the tick stuff, not tick trick, and this is the price action we don't want to see on our shares. It's still going up, but we're not seeing as much confidence here as we're seeing here. Okay, on the left, it's buy the dip, it's excess demand, it's demand building, supply removal. Here, supply is still in and about the place, isn't it? So yes, with demand side market, supply event equates. We go to the equilibrium market, of course, because supply increased. I would suggest supply increased here, and we went to the equilibrium market, and then supply was too much, demand gave up. Why? Because the fundamentals were changing, and we move into the supply side market. Yes, I'm taking a long time on CreditCorp, of course, but it's because if I can get this first case study out of the way with all the stuff I like to talk about, then we can do the rest of them very, very quickly. Okay, so bear with me on this one. Now, opposites. Okay, so what are the stuff we need to? So let's list them off here. We need in brackets to turn this bear trend. And what I'm, hoping to do is that you don't need to tune in on Tuesdays, right, and come listen to me. You can do all this analysis yourself. So one, what would we need? Massive demand side event. Yep, could be a candle, could be a couple of candles, really, when you think about it. Just what will they look like? Okay, they'll look like the opposite of this thing here. It will have a lower shadow. Okay, so what are we going to have? We're going to have a lower shadow. Okay, we're going to have a large, we're going to caps, no worries, I'm really emphasizing this, large white body, that sort of stuff. Cluster of those. We've got demand coming in. Then we want to see, we can see there how we went from high peaks and high troughs. We want to see the price action. Price action, let's stay in caps, price action equals higher peaks and NAD. Yeah, anything goes down. Higher troughs, there we go. You get the picture, right? Then we want to see, we talked about the trend zones. So testing the trend zones. Getting above them, not below them, above them, holding above them, not holding below them. Okay, obviously I can't draw that stuff in. You're going to have to use your imagination. But high peaks and higher troughs above those zones. Now, firstly with the short-term zone, which is going to be around here, and then with the long-term zone. And it's only until we've done and dusted this one somewhere in the other side. And as you can see, it could take months. Why? Well, this took 3-4 months to occur, didn't it, this trend change? And it could be 3 or 4 months. I think it started on CreditCorp, so it started in June, but it might not be till September, October, until we've got all the pieces of the puzzle to say we're heading back up again. And no, we won't get in at the bottom. We won't get in at 19, but it might be 22 or 23 or 24. As an average, once we get that one third signals to get back into the market. And we're hoping that, well, the next bull market in CreditCorp should take us beyond 35. And if we're in at 23, 24, then there's a decent trade there. We're not trying to pick the top, we're not trying to pick the bottom, we're trying to get the chunky bit in between, and that's your trend. Do I think CreditCorp has turned the corner yet? I think there are some nice signs here. So we can see some decent candles in here. Are they, what's the opposite of species ending? This idea of, say, germinating this new trend or starting this new trend, kicking it off, this tsunami of demand potentially coming in? No, I don't think so. This one certainly is not bad. Look, that's, let me arrow it. There it is. That one's pretty impressive. I like the fact that there really wasn't a lot of supply side response from this candle. We actually held it pretty well. That's pretty good as well. So it's all good. I'm worried about this one though. That's the problem for me. And with this little shadow here, see that little shadow there? Telling me that there is supply in the system in and around this light pink zone. And this light pink zone, to be fair, has killed trends before. So I'd be very, very cautious in CreditCorp. Could I buy it? Absolutely, hands down. No way could I buy this one. Would I hold it? Or if I squint, and this is, I don't know, if you did the research and you thought it was a fantastic stock, maybe you wanted to hang on to it. I could see, based upon what we've got so far, it's okay. Okay, I'm not going to go past okay. If anything, you probably should watch that pink zone and maybe sell the rally, if anything. But if I squint as hard as I can, maybe there's a reason to hold it to see how it develops and if we can do some of those other things. Okay, but definitely not a buy for me on CreditCorp yet. And I'm sure as we go through today's stocks, we'll find a bunch of things that are doing the right things, and maybe I can suggest a couple as well. Okay, so case study aside there, we'll get through the rest of them much faster than that, but I will do also just letting people know that tune in for the first time. Lots of people here today. This is the Refinitiv Icon broker consensus spreadsheet that I use, and that's the historical data we also get, and then you've got the forecast data, in this case on CreditCorp for 6 brokers, and then the rest of it is my own intellectual property. It's a few formulas I do for my own personal valuations, okay? But we have 6 brokers with estimates. 4 of them are at a buy, 1 is at a hold, and clearly 1 has refrained from providing an estimate, just doing the maths. Their average price target is 29.36, which allows about 39% upside from the current price, which is 21.07, and that could be today's price or yesterday's price, depending on when these guys update. Okay. Now, I can do a few things to tell you whether I think that is good value or not. And the first place I go is earnings per share growth. At about 11% for CreditCorp, I don't think, it's not astronomical, is it? So I'm probably not going to change that. If you wanted to be really, really conservative, you could go moderate and say, well, there's some concerns about economic growth going forward, and maybe 11% is not going to happen. So I'll let you decide. I'll just show you how it changes some of these things. Okay, so we go from, we're changing the discount rate here. We go from low risk, if you think it's low risk that they're going to execute on that, then you would say the fair value is about 21.25, and if not, if it's moderate, it comes down by about $1.50. Okay. Let's leave it at low for argument's sake while I do the rest of this. Next thing, I need a good benchmark PE, and historically we can see that the PE for CreditCorp has been in that sort of 16, 17, 18 zone. I can tell you exactly what it is historically by going dynamic H. Dynamic just means it's taking variables, okay, because these are all variables depending on which stock we're looking at, and H is historical. So it's saying, look, the median of the historical PE is 16. So that's very backward looking. We can also use just the broker estimates and say, well, dynamic F forward, that's what we had before, 13.1, and obviously the lower the PE hurdle, you're holding it to a much higher and higher account. You're making it tougher to become good value. Okay, the lower you make this PE. I'm pretty happy with 13. I don't think we need to change that all much. I think it's a very conservative estimate we're getting here for CreditCorp. I'm going to say it's about fair value. I'm going to say if you were looking at historical measures, for whatever reason, it's starting to look a little bit cheap. And let's go, if we take all of the PEs there, we go up to 15. And if you wanted to go moderate to be conservative, then it's probably looking at about fair value to a little bit cheap here. Okay, and I'm just showing you the difference. You could go to the recording, press pause, and you can see how some of those combinations work out. But this is where fundamental analysis is very much a story of beauty is in the eye of the beholder. So I can't give you that definitive, hey, this is exactly what the fair value of CreditCorp is, because it depends on your assumptions and my assumptions for these various inputs, let's call them. Okay, so when I'm doing analysis for clients at Think Markets and I'm writing a research report or I'm on the call on AusBiz, this is the sort of these are sort of assumptions that I have to make. So when I say, look, my fair value target is 23.17, these are the inputs I've put in. Okay, for me, I don't know enough about CreditCorp to give you a definitive. I'd probably stick with that, and maybe 15 is not terrible for a stock with 11% growth. I can live with that. I could even go target and say, well, let me be really strict. I'd cap out at 15. I couldn't go any higher than 15 for that one. Gives you 22.65. Okay, once again, setting the groundwork here. We're going to move through these very quickly now. Okay, let's get to the first one. First in best dressed was OSL, and that was for Brett. And I like the look of this straight up. So straight up, this is getting my attention because of what's happening here. I like this big white candle. Now, having said that, let me click on my update here, because as you know, I get my updates 15 minutes past the hour. It's been a little while since I've clicked it, and I'm going to get one in 5 minutes, as you can see, looking at your clock. So let's see that one come off a little bit there. But we've got Oncosil Medical Limited. I don't know what they do. We wouldn't have a clue, and that doesn't stop me from buying something. mind you. I wish I had a little bit more volume down here, Brett. That would give me a bit more confidence that there's enough interest. Now, the volume is being skewed by this large volume bar here. So if I zoom in, it pops that out and then it changes the scale. And I'm not saying this is where we're going to stay in our zoom, because it's too zoomed in my opinion, but it gives me an idea of maybe where we are recently. And I would say we're still not enough volume. There's not enough interest and excitement here, not dragging enough eyes onto this maybe to give it enough legs to keep going. And then you also need to remove some supply. Why do you need to remove some supply? Because I reckon you've got a fair bit of supply sitting in the system, Brett, around here. Let me change that to red. And how much supply is there? I don't know. We won't know until we get a bit closer to it and start to interact with it. But it could be that much supply. And I'd say there's quite a bit, because people got very excited if you've been suffering in it for a long time. And then the people who looked at it and said, oh, finally, this is going up, Oncosil. This is it. Like, I've been hanging on to this piece of junk for forever, right? And finally, it's got a pulse again. And I tell you what, I didn't get out last time it had a pulse, and I regret that like crazy. And it's got a pulse now. Okay, so if it just goes up to 10 cents where I got in last time, that's where I'll get out. And it didn't get there, did it? So it just creates this sort of psychology from holders that, oh, you know what, if this ever goes back up again, I'm out of there. And it just, we call that latent supply. Okay, so technical analysts will say there's latent supply. How much supply? It could be that big. I don't know. The only way to know is to start to interact with it and see what candles pop up when we get there. So bearish candles, black ones, upper shadows in this zone. Volume is going to say there's quite a bit of supply in there, and then we'll get to a feeling of how we deal with it. White candles in here, and we're not worried about that supply. Okay, no volume, lack of supply. It'll be interesting. I can't give you much more than that, Brett. It's very early stages, but there's certainly enough in there for me to hold it at this stage. I don't think I'm a buyer. I need to see some volume and some interaction with that zone, and then maybe chipping away at it until there's very little supply and we can get through that area. But a very interesting case study. I won't put it in the fundamental analysis tool because I'm guessing Oncosil Medical doesn't have, looking at the chart, and I'm being a bit nasty to Oncosil, but I'm guessing it doesn't have earnings, and my valuation tool won't work unless the stock has had some consistent earnings. Okay. Now MVP, or we're going to stick on this medical theme here. MVP is the next one. What I'm going to do is go back to my default zoom, okay? And it's very important that we move from stock to stock as a technical analyst to look at our default zoom, so we're comparing like for like. Number one, we're getting enough information in to get the broader trend. We can still see the candles, so I'm not zooming out too much, but we're also comparing like for like, so that when I go from, for example, OSL, okay, I'm looking at that trend very consistently, on a consistent basis, I should say, with that trend. Okay, this trend looks pretty horrible. Okay, that's pretty bad. A lot of stuff needs to happen before I could call this a buy. Refer to your CreditCorp analysis there. But these candles are good. I like that. I very much like that. I would have liked to see a little bit more volume coming in to say we're removing some supply. I mean, as in, where's that supply going to be? If it's not at this level, maybe it's waiting up here. But they are very, very strong candles. I mean, if you are going to make a low, those are the candles you want to see around that low, okay? And we've had a decent little whack of supply through here, right? So through here, maybe we've got out of some of that dead wood. Look, the picture you want to see to tell you that you've got a higher probability that that is a meaningful low is more that sort of a pattern here. So you've seen the real capitulation, then you get the white candles, some really nice ones in here too. Okay, so really nice ones in here as well. I mean, really nice. And when you get the nice candles and you get such a shallow pullback before you get another one, that's usually very, very strong. Okay, so this is the sort of pattern we want to see to have confidence of a low. This I don't think is as good, but it's not bad. If I had it, well, I wouldn't have it because I would never own a stock that looks that bad. But if I had it, could I hold it? See, again, we're pink zone stuff, aren't we? We're supply coming in at that pink zone, looking to take some profits. It's also around $2. My gut's sort of saying, if you had it, you're probably better off just taking the bounce and getting out. If I squint it as hard as I can, maybe I can say there's enough in there. If you want to just see how you go, just wait for half a dozen more candles, more black candles, and you can give up on this one. If the white candles start popping back in and you get this sort of shallow pullback from this white one here, so that starts to go in here, and then another white one, yeah, well then you've been vindicated in giving it a bit more time, and then 250 is probably the next level. Okay, and we'll reassess there. I'm not going to go any further than postulating what might happen outside of that. So not a buy yet for me. Still so many things need to happen. We need to deal with those moving averages. They need to go from offering dynamic resistance to dynamic support, supporting the price. That's not happening yet. And then we really need to deal with that problem as well. But some promising signs, let's say, on MVP. Let's get to the next one, which is for Glenn, and Glenn has TLX, which, if I'm not mistaken, is another pharmaceutical stock. Oh, and then David, in a couple, has PNV as well. Okay, this looks good, far more progressed, and it's great. It's great we're getting these in this order because, you've heard me talk about the stuff we need to do. We need to get above that short-term trend. We need to turn that short-term trend from dynamic resistance into dynamic support. We need to see the white candles come in as we did, and these are nice white candles, and again we've got that building demand. Remember we talked through here of, obviously you've got your supply event, not that it's a species killer at all, but let's say there is a supply event there with these three candles blended. This is a species killer, here you go. So this huge gap. Okay, huge gap. And blending candles, you should understand that this is just an even bigger black candle. So here's your that's your species ending event right there. So if you had it, species ending event. All right, so that's a compulsory, minus 1/3 here. And then you can see the building supply. It's clear as day. Hopefully I've tuned your eye in now to these things. And what's great is we didn't just see it on CreditCorp. You're going to see it over and over and over again. I'm not making this stuff up. I didn't just make it up yesterday. It exists. It's real. Obviously we're testing LT zone. We're failing. There's a little rally in here. Rally fails, and it looks a little bit different from the last one, but it's even worse, to be honest. Short-term trends turned down. So all of these things turn it upside down. You can see now we've got the building demand. Okay, what's the point of all of this discussion? We're changing things around. We can see that we are, we're removing supply, right? Because we're taking out these supply zones. We know that those old peaks. Getting the wrong arrow. There we go, move him over there. So we break through supply, come back, shallow retests, high peaks and high troughs, wonderful candles, taking out the long-term trend zone now. And much like we took it out here, the rally failed. What we need to see is that the pullback fails, if there is such a thing, of a pullback failing, if you could call it that, because it means it's going higher, isn't it? If a pullback fails, it means we hit this zone, and we go higher again, okay? And it might not even hit this zone. You can see this little shadow here and this little shadow here is telling you that demand is in the system, even today on a pretty terrible day. So we start to do that. This is very close to being back to a buy for me. This is the closest thing in terms of a turnaround play, okay? So we've got this concept of a turnaround play. So the two types of setups for me, right? And this would be setup 2, okay? Because this is the riskier of the two setups, okay? Because the first setup is one that's in trend, okay? So we're just going to go one is just in trend, okay? And those ones are far less risky, and they're happening obviously on that side of the equation. And if you don't know where the two sides are, you can see, we've got one side over here where you're in trend, and then over here you're fishing for the turnaround play. So very close to calling this one a buy again because it's doing everything that I've asked for. Okay, and a few people may be shouting at this screen, hopefully saying, "Well, Carl, we'd like a little bit more volume on the push, right? On this push here, a little bit more supply removal." Okay, as long as the candles stay good, I can forgive that. Okay, as long as we're still getting nice white candles popping in, because maybe there is no supply. Okay, I would expect there's going to be a bunch of supply here. That's where the huge supply is going to come in. Maybe that we were just so fluid. Here's your supply zone, right? If we're looking for supply zones, you're looking at where there was lots of trading, okay, where lots of people got in and then regretted it. Okay, that's how you know where those supply areas are, right? So here's your supply area. Supply, let's call it supply zone. And here's the next one. You can see here, all the touches of that pink rectangle. Okay, that's the next supply zone. So I'm actually surprised that we had these beautiful white candles and then no volume at all. It just tells you that people are hanging on. I mean, they're not regretting their decision to get in previously and try to get out now. I'm starting to like this even more. So I won't buy it today. I won't buy it today because let me just see a couple of white candles come in here. Okay, and then I wouldn't even need it to break out through that peak. I think I could give it a go. But remember, I'm not putting my house on this one. Much like I spoke of getting out in chunks, it's getting in chunks, especially when you've got these turnaround plays. I mean, you can be more confident and have a bigger swing in trend, but when you've got these turnaround plays, I think it's best, to take a nibble, see how that works out, and then add some. So you could take a nibble in here on some white candles, and then as it moves back up and closes above this high here, that high there is say 560, you'd take another nibble, okay? And then we see how it deals with this. If it has a few black candles in there, we just take it easy, see how it pulls back. If it pulls back and makes some nice white candles at 6 in this nice price action, then you nibble a bit more. And then it closes above the supply zone and you nibble a bit more. And I'd say you probably set then for, let's hope it goes to $12 or $15 or wherever it can go. Okay. Hey, if it doesn't work out and we're wrong and this trend isn't ready to change yet, and we've only taken a nibble and it plunges back to 4, we're not as annoyed as if we'd taken the whole swing here because we've got a bit excited about something that looks like it's going back up. Okay, this is a very fascinating chart for me. Thanks, Glenn, for bringing it up. Let's see if MVP has spat out some fundamentals. Earnings are negative for the foreseeable future, and therefore we're not going to have enough data here, or the right sort of data for my spreadsheet to give us a valuation. Let us put in Telix and see if we get anything. And I fear, being one of these medtech companies, earnings as usual tends to be a little bit of ways away. But we actually got this here, 18.2 and then 33. So amazing earnings growth clearly in the business. They kind of hit that critical mass, I guess, of revenues to overtake their costs. So cash flow positive and some profits coming. If I'm really optimistic, I can change that. And it takes that and then looks at that as the growth rate. We obviously need to reset some of these things. Moderate, I'm going to go high, and that's going to make this even worse because we're years out, and that's a huge growth rate. But your PE is not going to stay at 15 because it's a growth stock. If you've got 516% growth, I could easily pay 40 times for it. Okay, and now it's starting to look really cheap. Why 40 times? Because back in the bad old days when interest rates were 0, and any tech stock, med tech stock, PEs were, you go 80, you wouldn't flinch, 80, 100, 200, and people were seriously arguing that they were realistic, PE targets. Now, let's scratch that out, right? That is bubkus. Taking a broad swathe of bull markets and bear markets, your growth stocks, a lot of your analysts, a lot of your fund managers, they're topping out at 40 on their target PE. Okay, so it still looks cheap even at that. So I think even with a high risk level, I think this one looks really interesting. So I would put this on your watch list. It's going to be on mine. Let's have a look at the next one. Thank you for that again, Glenn. Next one is for IVZ. IVX, I missed. IVZ, there we go. Invictus Energy, which looks half decent. Half decent because, yes, we do have this long-term trend, which is holding for now. I'm concerned about this sort of stuff here, and I'm concerned about that candle. I can go hold, but is this the best thing to do with your money right now? I'm not so sure. There's enough in there to hold it. A little bit of supply removal here. I guess we haven't filled the gap. That's positive. Shallow pullback. This candle looks bearish, but if you blend it, you've got sort of a 2/3 white candle with an upper shadow. I'm going to go hold. I don't know enough about it to go any more than that for you, Craig. Let us see if there's anything here. Sometimes these little energy companies do have some earnings. No, It might have earnings, but we just don't have enough broker estimates there to get any forecasts. I can't do much more than look at that chart, Craig, and say, look, it's not the worst thing I've seen. It's not the worst thing I've seen. Let us move forward with PNV, because I've done Telix for you, David. I've done Telix already, David. And this is the other medtech, and it's one which is kind of toying with our emotions here in Ask the Experts, isn't it? Because it has shown so much promise in turning around this trend, doing all the stuff we've asked it to do. And it has done it, to be fair. But it's just been plagued by this pesky supply. You can see elevated volume in there, just telling you there is some supply lurking around on these rallies. That's the key level. I can hold it. I don't think there's anything in there so sinister yet, David, that we would need to get out just yet. I think we can hang in there. A little bit of a lower shadow today. Let me check the update again, because we've got it. So this will be the 1 p.m. update that's coming through, and I think we saw that shadow grow a little bit there, did we not? I can definitely go hold here. Would I buy it? It's one of those things that I don't think we need to buy it today. Let's wait for a nice white candle, a long lower shadow, and then maybe you could add a little bit. But from a reward to risk perspective, we started talking about this, I don't know, somewhere down here, wasn't it? We get just a bit closer to that key supply zone as well, so just be careful with that also. And it's getting up towards that $2 mark when we get there. Hey, something that reminds me, we talked about round numbers. Silex last week, we said, originally I looked at it, I said, no reason to manage our exit, and that was looking at this candle here with the arrow. And then I said, it's getting pretty close to $3. And therefore, you really want to think about just managing your exit on that basis. And by that I just mean selling some, not selling all. We wouldn't do that in this scenario. But if we have a look at the high there, I thought, after I looked at that high and I saw 302, and I thought, yep, that's the round number. That's the round number coming into play, and we've got to have a little bit of a pullback here. So if you manage to get a little bit out there around $3, it's fine. Would we buy it back? Well, let's get rid of some of this stuff here and see. Yeah, look, I think it's pretty close. I mean, today's candle's looking half decent. And this is the zone that you'd be assessing it in at that light green zone, that short-term uptrend. And it's also this sort of static support point here, the static demand point. So, yeah, look, I think just stay the course. I think if you've sold some, if you sold a third at the round number, hang on to the 2/3. Maybe don't add another. Don't add it back here, because I'm a little bit concerned about the supply event that we saw. So that and that, they're pretty nasty. They're pretty nasty. So I would say hold, no doubt, but maybe not add that third back. That if you did sell it, okay, on Silex. General advice, of course. I'm not telling you what to do. You have to be careful. It's just what I would do, what I'm suggesting that I would do. Let's have a look at the next one, which is for Terry, and that's BCI, which doesn't look good, Terry, unfortunately. And I looked at that and I go, okay, well, maybe there's that sort of sell, that big capitulation in the selling where everybody's out. Everybody has to get out is out. And that volume influx would suggest it, but the only way you can say that the demand is really working back in is if you got the candles to back it up, and we didn't get the candles to back it up. So generally what we say is that there's probably more to come. So I'm pretty concerned about this, and I hope I'm wrong. And this is what Ask the Experts is. I can't tell the future, everybody. I have no idea what's going to happen tomorrow. Okay, even when with the best indications I can draw from the price action and candles, I can't know what's going to happen tomorrow. And you could have the best indication that something is likely to happen and the opposite could occur. That is the market, okay? So when I say I think there's more in this, I hope I'm wrong, and I hope it goes straight back up to 40 cents tomorrow, okay? It announces something wonderful, BCI Minerals. But I think the balance of probability, and that is just the number of black candles that just plague this one, that people are just getting out. They're just finding reasons each day to sell this one and not get back in. And the people who have cash, people who are potential buyers of this, just don't appear to be interested almost at any price. So I'm really concerned about this one. It's definitely not a buy for me. Next one is, I'll do it very quickly because it's the second one, JIN. Is it doing enough of the stuff, okay, to tell us it's turning around? The thing that I spot here is the, okay, well that candle's half decent, but the price action is very overlappy compared to, say, that Telix, which I think has got much better price action than this. Even when it was going up, it was a struggle, wasn't it, for this one? I'm going to say that with it struggling here, and it looks like really struggling here, I'm concerned that this rally is a false rally, false dawn potentially, and it may have further to go. Look, below that, I think it's in real trouble. So that low there, I should say, that low is 1377. Close beneath that, I think it's in real trouble. Could I hold it between there? I just don't think this is the best price action out there. So I know I can't really see a reason to hold this either compared to some of the other ones. It's just come. This should be demand. This point here should be demand. We've just sliced straight through it without a care in the world. So I'm a bit more concerned about that one. That's JIN, and I will do it very quickly in here because I guess we will get some estimates for this one. Quite a big company, well followed, 7 estimates in fact, so 4 buys and 4 holds, and 25% upside potentially to 1910. I need to reset that to June 22. High risk potentially of hitting 15%. No, I don't think that's a crazy earnings growth target. It's a nice target. I'm going to go moderate, and then your target PE. Well, it's been up there in the past, hasn't it? Mid-30s easily. Looking forward, probably 20s is a better way to go. I think somewhere between 25 and 30 is a reasonable target for this one. I think 22.5 is too low. I don't think that's fair on this one, so I'm going to go 25. And for that growth, can I go 25 for 15%? I think for 15% growth, I could definitely go 20. No doubt about it. I'm not sure if I'm up there with this one at 25. Maybe let's split the difference and say, I don't think it's that cheap either. Okay, I don't think the chart looks good, and I don't think it's a screaming bargain based upon its valuation. Next one is for Jane. Jane wants to talk about ALL. Lots of scratchings on this one. I'm going to show you ALL, Jane. I'm going to go back to Telix. Now, I'm making a big deal about Telix, aren't I? ALL and Telix. Telstra. Sorry, everyone. We don't want to look at Telstra. ALL and Telix. ALL and Telix. And you can go do that in your own time as well. But sometimes it's good to look at something that is doing everything we want and just compare it to what we've got. I think Aristocrat is very good, don't get me wrong. I think it's doing more than many other stocks out there. More than. But if you had to pick between the two, what would you pick, Jane? What do you reckon? I mean, this looks like it's failing here, if anything. Telix was up here, remember? It's up here and pulling back here. Okay, I think there's a lot of good stuff happening on Aristocrat, and I won't repeat all those good things because copy and paste everything I said for Telix on Aristocrat. It's very close. There's some good stuff happening. That's not what I want to do. Let's undo that. I just want to check I'm just going to draw over the price action, and is it that clean price action? Looking for a little peak. There is a little peak trough in there. I'm going to skip it for that one, and then there's one in there and one in there. So it's not bad. Let me zoom in for you. So it's not bad. The price action is not bad. It really does depend on what's happening here. And there's that little candle today, maybe keeping it above this level here. So as long as we stay above that, I'm pretty happy with the technicals, and I can see a path to holding here. So a few I've talked about today. Look, I really can't see a reason to hold, even if I squint. I can certainly see a path to holding this one. I'm not a buy yet because it needs to get more in this area here. Okay, doesn't it? It needs to do more of that Telix stuff. But it's getting pretty close, isn't it? Let's have, I think we did look at Aristocrat not that long ago, so I'll just punch it in. I can't remember from one Tuesday to the next, but I don't want to waste too much time because, let's face it, it won't have changed much from last week. That's why I'm trying to move through this quickly. 10% EPS growth, it's not huge, is it? If you go moderate, that's up to you. Just makes the valuation come down. The right PE for this one, I think 18.2 is holding it to a very high account. I'm happy to leave it at that. You could go 20. For 10%, I wouldn't go more than 20. I mean, that's where it would cap out. So I don't think Aristocrat's necessarily a bargain here. I think it's around fairly valued. That's just my opinion. The brokers love it. They think there's 16% upside and 11 of them have buys. But that depends on whether you believe the brokers or not. That's whether you believe they have your best interests at heart. Hey, and you're not a client of any of these brokers, are you? Think about what these brokers think about you right now. Okay, are you a client of theirs? Are you a heavy hitter? Do you have a few $1 million in your account and you trade regularly with them? Okay, and I'm guessing the answer, if you're listening to me, is probably no, no, and no. So they couldn't care less about you. And these recommendations they publish to the whole world. Think about the value in those recommendations. They don't care about you, right? You're less than a flea, on a pile of poo. Let's face it, compared to these big, massive brokers. And they're making this stuff public. So people that go, oh, the broker consensus is buy, and I'm going to buy, I think you're kind of kidding yourself, okay? And people that go, well, the broker consensus is up 16.5%. I'm not so sure your logic is sound there, because I don't think they're trying to do you any favours because you didn't spend any money with them. Okay, next one is going to be, DMP Jane. We're going to do two. Yeah, okay. I'm sure a lot of people want to know about Domino's Pizza. Trend change all over it. Hey, okay, not going to go into all that stuff again, but don't forget, up here, everybody loved this stock. It was, the best stock on the market. No, who cares? Things change. Where are we now? Are we doing the opposite? Are we doing the opposite of this stuff down here? And I'll let you answer that question. There's some good stuff going on, like this is good, this is good, this is good, this is good. This shallow pullback here is good, but this is bad. I mean, good, we're above this. Okay, I'm going to go hold. I think we can make a case to hold this one. There's a path to holding because we're above this short-term trend zone. The short-term trend zone is pushing up. These last two candles are disturbing though, and we don't want to see it go too much further down. In fact, if it closed beneath that low there, that little trough, 66.31, I'd get really concerned. I'd say we're probably going to head back to the lows. If anything, maybe have another leg down. If we can quickly turn it around, get some nice white candles in here and close above 76.76, I might even think about it for a buy. A lot of work to do though on that one. Let's have a quick look. I know this is a hugely popular stock, so let us do this. I think there's some value here. Domino's fundamentals coming up. How many brokers? And now that I've told you there's absolutely no value in looking at this, let's look at it. 14 estimates, 2 strong buys, hooray for them, 5 buys, 5 holds, and 2 sells. That's interesting. I probably believe these guys before I believe these guys. Let's go to a 23% upside from the current price. I need to change that to that so we get some numbers. Their expected growth rate, 18%, quite high. I'll probably go moderate on that one. Target PE, let's go dynamic F, and you'll start to see things change because we get a high PE. And I think 27 for Domino's, given its history, is pretty reasonable. And that growth rate, or if I was the most generous person in the world, I could say it's fair value here. Otherwise, really, if you for 18%, I could easily go 20. I could easily go 20. Starting to look crazy expensive there. Like if you're a fund manager who for a reasonable growth stock, look, this is better than reasonable, this is good growth. But if you say for a good growth stock, I can go up to 20, you are still looking at Domino's as being hideously overvalued. Do you get where I'm going like this? And we talked about this idea of fundamental analysis, beauty's in the eye of the beholder. So some of those big brokers will have P targets or caps for that growth rate much, much lower. Okay, in which case, you're looking at Domino's. Here we go. You're looking at Domino's because you've been anchored. You've been anchored to think Domino's is the best company in the world and it should be worth over $100. You're anchored to that, but you're not the market. Some of the market is probably thinking that, wait a minute, Domino's is probably good value around about $50 a share because at my 20 PE cap for 18% growth for the next 3 years, that's where I top out. And that's where it's a buy for me. Okay, and some brokers or some investors might have higher PE targets. They might say, well, I'm happy to pay historically 42.9 on Domino's. I'm not so sure about that. Okay, in which case it is $112 a share. And this is the vagaries of what people think is value. And for me, I say, I don't care what you think is value. I only care what you do. There's what you say, what you think, and there's what you do. And this stuff here is what they are doing every day, not what they are fooling us into thinking. Okay, you got to snap out of that. You got to snap out of this idea that hey, there's a narrative there. Domino's is a great stock. It's worth $100 a share. That's going to cause you to hold all the way down to $20 a share. MRM. Looks good. I think it still looks good, King. It's hanging in there. King says he's got a small position, wondering where the dynamic support is sitting at. Dynamic support around that 58, didn't see that in the short term, but it has held. I mean, this is, look at that. It's done exactly what it's supposed to there. I'm a little concerned that this, see that supply there, and it's nasty, yeah, and then that is that building supply. Okay, lots of stuff in here to like though, King. And this is. I know. I wish I could just say, "Hey, King, this is exactly what you should do right now," but sometimes it's not that obvious. This is good. The white candles are good. The holding of the trend is good, but then it's being sort of balanced out a little bit by these two supply zones in here, and it's starting to push the price a little bit more sideways. Okay. I guess the reason why you pay me the big bucks is to make a call. By the way, you don't pay me anything, do you? Now, I'm going to go hold. I'm going to go hold. There's just enough in it to hold, King. You don't have a huge position, but it's, you know, keep a tight leash on it, perhaps. Okay. I'm curious. I haven't looked at this one. Let's see if we've got any MRM, not MMA. See if we've got any fundamentals. Well, it's going to make money next year anyway. It's just going cash flow positive. That's generally when you like to get them, right? They're just going from cash flow negative, cash flow positive, starting to make money. It's generally a good time to get on board. Obviously, we can't get a GR on that, so we'll go here, which, if I go June 23, should give me a GR. That's weird. There is a GR there, as in growth rate. I'm not sure why my spreadsheet is not working right now. It should be working. Okay. I'm going to say, unfortunately, there's probably something very simple I just can't see right now. There's a button I need to press, or I need to change something. None of this is going to make any difference. And if I go F there. Oh, okay. Well, that changed it. Okay. Well, there you go. What was that on before? Historical. I was looking at historical PEs, of course, and the reason why it's not working is there are no historical PEs. Okay, well that makes sense. Now, the growth rate here is an astronomical 175%. I don't care how good this company is, I'm going to go high on that one because the execution risk is substantial. And then what would you pay for it? Well, remember what I said, that in this environment, we're not in that environment where people are paying 100 and 200 times earnings. You know, you cap out a growth stock at 40, and it's still looking really cheap there. Okay, so without doing the deep dive on this, I'm going to suggest that it is still looking cheap. Okay, and it might be the case that, well, this needs to be more sort of in the zone of maybe where it's headed. So I thought I was going to get 27 there, I didn't. But if we go 27.7, it's still coming out cheap. Okay, even with the high risk rating there. Okay, hope that helps you out there, King. Next one is WPR. This is a favourite, isn't it? This Waypoint REIT. I don't know why people are obsessed with this REIT, but I will cover it for you, Michael. It's looking good, though. I mean, we talked about it last week as well. I don't mind. This is all good. I like this. This is all good here. 100%. I can get to a hold, and it's a solid hold too. I'm not a buy though, and if somebody told you to buy it, that's okay. You know, go on their advice. But I can get to a hold with them now, but I'm not a buy. Too much more needs to happen around this trend zone before I can get to buy. And even by then, it's probably going to be so close to this huge supply area, the reward to risk is shot. So I wouldn't even call it a buy, even if it did the right thing, because there's so much work it needs to do in here. And you're a long way away from maybe where a stop loss might go, or somewhere around here. Okay, so I can go hold on that one. Oh, I'm curious. Why WPO? What's with that one? Let's have a look here. Waypoint REIT, and we're going to go December 22. We're going to go probably not a huge hurdle there. So let's go low execution risk in terms of getting 1% per annum growth. Maybe it's not. Maybe it's high risk. I don't know. Maybe they're that bad. Target PE won't be 27. You would not see. I mean, what PE would you pay for 1% growth? Well, for me, I wouldn't go over 5. You know, in which case it's crazy expensive because there's no growth in there. Let's look at what the market's saying. That's me. The market's happy to go around about 15, maybe 14. So let's go 14. and it still looks expensive. So what's going on here? Something odd about that one. Okay, next one is for Feng. It's S32, another popular stock. Let's have a look. S32 in here. We'll do some valuation on it, and we're going to go back to June. And what's their earnings growth target? Minus 14%. Look, they should be able to stumble to minus 14%, so I'll leave that as low. It means the brokers have very low expectations because of the commodity price bump. So they're expecting prices of commodities to come down, which they are doing right now. What's the right PE for this one? I think 4 and 5s, they're too cheap for this. I could go 8. 8 would be a bargain still. I could go even 10. I just think it's too low. But there's clearly some risks in there. So let's go broker stuff. 5. Yeah, and this is the thing. The brokers are, as much as we can make this case for battery metals and the EV revolution, you've got to understand that if commodity prices come back, these things aren't cheap right now. Okay, unless you start to put in some of these more historical types of valuations on them in the PE. This is about what I would do, what I'd be comfortable to pay for this stock. And I could go as high as 10, which means it's not expensive here. Okay, but you can see some of the risks in that valuation. Let's have a look at S32 for Feng on the chart. We've drawn this one before, haven't we? And it's doing all the stuff which we don't want to see. It's all trend change here. And where's the downside target? I mentioned on the call last week, Ausbies, I don't think they're going to crash, but I think another 30% haircut on many of these stocks would not be unreasonable. And then let's see how they turn around from there. And they may well be very cheap at those levels. But if we're talking recession, commodity stocks don't do well in recession. I mean, we got this boost and juice here from supply chain shortages, but then it spilled over into recession talk. And that's how we go from uptrend, equilibrium, and then doing all those things which start this downtrend. $3 would not be untoward. Buy, hold, sell on this one, I would call that a sell. And I am a sell at many of these material stocks at the moment. I have been for quite a few weeks now. Next one is Macquarie Group MQG, another one of everybody's favourites, another one of those hugely popular, isn't it, with analysts, high quality stocks, conviction buys. We can see very clearly here this change as well. And we have failed at the long-term trend zone. There's your big failure there. That's your key, really, isn't it? And if you're managing your exit on Macquarie, if you're following my system, you would have had many opportunities to get out before now. And I do think with this zone quite solid here, and the candles looking quite bearish, I think we probably can come down. Buy, hold, or sell for me on Macquarie. I'm going to go sell on Macquarie. That's been my opinion for a little while now. MQG. Let's have a look. This is for Damien. Maybe Damien's not very happy with me right now. And we do have about 10% earnings growth. Happy to go low. Well, low, I don't know. If the market gets really bad, these Macquarie is going to struggle a little bit. Let's give it the benefit of the doubt. Let's go here and go here. And that's the question, isn't it? What probabilities do you place on these things as a fundamental analyst? I prefer just to look at the chart. And it tells me what everybody else is doing. Let's go, would you go 20? Damien, what do you reckon? What would you pay? What's your number for Macquarie? 15? Let's go dynamic F, 14.6. I'll live with that. I was going to say 15. I mean, if I go 15, it gets a little bit cheaper, right? But it would cap out there. I couldn't go any higher than that for 10% growth, even for Macquarie. So it's about fair value here. I wouldn't say it's a bargain buy, and that is a little bit at odds, potentially with the brokers who think there's 22% upside, and many of them are strong buys and holds. But again, are they working based upon their best interests or your best interests, I wonder. Okay, it might be nice to continue to tell people to buy these stocks all the way down so that they've got somebody to sell these stocks to. Now, these big brokers, they would never do that to us, would they? Us lowly pissants who aren't their clients. No, they'd never do that to us. I like Resmed. Copy and paste everything I said for Telix. Only fast forward a little bit because it's actually doing all the stuff I want right on this little bounce here. I'd go buy. There you go. I'm going to go buy. That's the first buy we've seen today on Resmed. That one is for Helen. I like it. Stick with it, Helen. I think it looks okay. Famous last words. I've probably just jinxed it, but I think it looks good. Let's go here. What we're going to do is we're going to do an extra Ask the Expert session, okay? But we are going to do well, I have this standard one for all comers, because you don't have to be a client for Think Markets, and then we might do another one, or maybe even a couple during the week for our clients of Think Markets, and that's going to give our clients, obviously, priority to get their questions answered, okay? So, look, it's coming. Stay tuned. It's the best way. The best way to get your question answered, I guess, is to become a client of Think Markets, and that's I think that's fair too. Okay, let's go here, and we're going to go. What's our growth rate? EPS 11%. Probably many of you are getting pretty good at guessing some of these now. 11%. Let's give it the benefit of the doubt. Resmed, medical company should be fine. And again, that's how hardcore this fundamental analysis is. But let's go. Dynamic F is 30. It's looking expensive there. What are the brokers? I mean, it's been much higher. I think 30 is very low for Resmed, but not hugely low. Could I pay more for that growth? No, I probably couldn't. So I'm going to say that if I stick with that, it's still expensive. So here we go. Here's this huge disconnect between the chart and the valuation. And I would back the chart. So Resmed, based upon my numbers, looks expensive here, but I'm still happy to call it a buy. Okay. I'm quite comfortable with that disconnect. It makes other people uncomfortable. I'm comfortable with it. Pointsbet, we thought it was going to get going, David, and we talked earlier on in this session, this idea of these turnaround plays, and it was started. I'm quite certain I didn't call it a buy. I drew this price action and said, hey, David, this is what we need to see before we get excited, and it hasn't done it, to be fair. That's these scratchings here from a previous session. But we have to understand, remember, that these turnaround plays equals significantly elevated risk. Okay, they're not in trend. So if you're going to fight the trend, you know what you're messing with. You know what I mean? Buy, hold, sell. I'm struggling to get to a hold again. Before I was at a hold, struggling to get to a hold. It needs to sort itself out real quick. And I promised to do one more, which is Whitehaven, which I know is a popular one, which looks good. And I looked at New Hope today as well, NHC, and it looks, yes. So this is, hey, compare the pair, Pointsbet, New Hope, Whitehaven, which two have got the goods. Even as uncertain as things are, commodity prices are tanking, but people still need to stay warm. And with all of the underinvestment in coal, okay, New Hope, Whitehaven, these two look good. I'd buy both of those right now. I think they look great. So, we can spend a lot of time looking at Pointsbet, or we can spend much less time looking at this and just say, they look fantastic. I know many people that are listening today still own those, so hang on to those. If you don't, then I'm happy to buy those. Let us adjourn for the day. I'm going to talk about your opportunity to come back and ask me questions next week at 1 p.m. If you're watching me in the recording, that's how you register to turn up live. As I said, we'll try and get some Think Markets clients webinars going as well. And that's an incentive to become a client of Think Markets. You get my analysis, of course, you get to hang out with me potentially more often during the week, get your portfolio questions answered. But we do have every product you could ever want to trade for a great flat rate, and it is HIN sponsored, CHESS sponsored, okay, 24/7 customer support or class trading app. Head to the website, register now, you could be trading in minutes. As a bonus for coming on board with us, you do get 10 free trades. That is an offer we've had running for a while now, but you get 10 bonus trades on top of that if you say you have listened to me and asked the experts. Terms and conditions apply. You've got to use them by a certain date, that sort of stuff. Head to the website for details. And if you're already a client of ours, here's an even bigger incentive to get 4 of your friends to join, and I'm sure they're still paying $20-30 a trade with their banks. Get them to come over to us. They pay a lot less, and you'll get potentially up to 12 months of free trading. If you're watching me on any of the social media platforms, make sure you hit the subscribe button to remain notified of any of our new videos and analysis. And of course, smash the like button to let us know you love what we're doing, so we'll continue to do it. Apart from that, it has been an absolute pleasure chatting with you today. Hopefully you learned lots. All the best for investing until we catch up again. Bye-bye for now.